Good morning, everyone. I'm Adrienne Ackerler, your moderator for today's webinar. I have one bit of housekeeping before we begin today's webinar. I can see that several of you on the call did not enter your audio PIN when you signed in. It is important for you to do so. If you do not enter your audio PIN during open audio portions of the webinar, it is likely that other attendees will be able to hear your conversation. We certainly don't want to inadvertently be eavesdropping on what's happening in your office. If you have not already done so, please go to the GoToMeeting panel on the right side of your screen and enter your audio PIN now. Thank you. Let's get started. Today's webinar is Rethinking Will Call and COD, using e-commerce and digital marketing to deliver repeat gowns at better margins. Our webinar today is sponsored by our friends at Consumer Focus. Consumer Focus is a preferred partner of Energy Engine, offering structured marketing services to many Energy Engine clients, which are proven, measurable, and follow Energy Engine best practices for greatest success. Now, let me turn the program over to our host, Jen LeClaire, Creative Director at Consumer Focus. Jen?
Thank you, Adrienne. We've worked with Energy Engine for many years, and we're really excited to participate as a partner in this webinar series. So I'm happy to introduce Mark Stillman. Mark is a co-founder of Energy Engine, as well as president of Energy Engine Advisory Group, a management consulting firm that provides a broad range of services to participants in the downstream energy space. Mark is a student of the energy industry who continually studies the changing dynamics of this exciting marketplace to help position dealers and technology vendors for the future. Mark has a broad professional background with specialties in corporate development, finance, marketing strategy, and product hedging. Through these webinars, we all hope to shed a fresh perspective on the emerging challenges facing our industry, stimulate a meaningful dialogue, and sometimes even challenge the conventional thinking of attendees. So I will pass it off to you, Mark.
Thank you, Jen. And thank you to the entire Consumer Focus team for allowing us the opportunity to speak to the group this morning and partner up on these webinars on what is a really important, albeit challenging and sometimes controversial topic of will call and COD. Just a real quick primer, Energy Engine is a software company that builds e-commerce solutions for fuel dealers only. We're only in the fuel, heating oil, propane business. Been in business for about 10 years, and our system allows a website to engage and transact and communicate with consumers in the same way you can think of it as a mini Amazon for your fuel company. So we are quite honored to be in this industry. All of us who are founders on the phone today are from the industry and part of this community. Because e-commerce has become more and more prevalent in the fuel industry, it is really starting to get the attention of dealers and customers for will call and COD. And again, I know that this is a pointed topic. That being said, I give this presentation quite a lot with partners and at events and things and invited to talk about will call and COD. In fact, I've been asked to do it again at Eastern Energy Expo, and I'm always fascinated that one of the more polarizing topics in our industry does seem to put people in the room and put people on the phone, so there's an interest level. So I think there's a realization that this market is changing. I also think there's a realization that there's a lot of gallons to be had out there. But I do think I'm not wrong in realizing that this is still a topic that fuel dealers aren't quite sure what to think about. So my job today is to not change your mind about will call and COD. It's simply to give you a little different perspective on how this market has changed from the customer that we've dealt with in the past that fits this profile. So sort of my main goals today are to give you a little insight. I and we as a company study a lot of the industry dynamics. I always have. I've been in this industry for 25 years. I wasn't born and raised like you were, but I do a lot of research and analysis, have lots of great friends in the industry, in the dealer and vendor community in NORA. So I'm constantly trying to find things about the current state and future state that can help dealers and technology vendors position themselves for the future. This industry has been under a lot of pressure in the last 20 years. So today I'm going to focus in on will call and COD, give you a little insight about attracting and converting this customer. I know it seems counterintuitive to full service dealers that we would actively attract and convert this customer, but hopefully I'll give you some perspectives on why that might not be the worst thing in the world. How to use online engagement tool. There's no doubt that this type of customer is best served online. And by engagement, I mean tools like the Energy Engine, although my job today is not to sell the Energy Engine, but e-commerce, and then, you know, in the vein of consumer focus, really specific types of marketing that this customer likes to use in an online environment. And then trying to build a e-commerce growth strategy. E-commerce fuel for our many dozens of customers almost is treated like a separate diversified business for them. But before I start into the main meat of the presentation, which shouldn't go much more than 45 minutes, I hope today, I always like to put this slide up as a reminder. I think we all have become desensitized to how technology has been consumerized and has invaded at first and now has become integral to our existence in a very short amount of time. You know, 10 years ago, Facebook was competing with MySpace. You know, my joke here is that lots of young folks on the phone wouldn't even know who MySpace is. Amazon was essentially selling books. They had a small mail order business, and Jeff Bezos was trying to get that up and running, but by and large, they sold books, and they had a crummy little cafe in the back that nobody really liked. We were 2 years out from the iPhone. It's shocking to think that this massively powerful computer that we carry around in our pocket. I was told recently that the power of the average iPhone exceeds the power of the computers used to launch the Apollo mission. And so, but that's a fairly recent revelation for us, right? But boy, has it changed the world. It's connected us to the world. We used to go to the store. I'm 55 years old, so I really used to love going downtown with my mom and dad or going to the mall, and those days are certainly over. All those types of businesses, malls especially, are really under pressure because online shopping has become sort of the norm for people for a whole bunch of reasons, convenience, time, all those things. And we had never heard the word e-commerce. I'm actually thankful I had never heard the word e-commerce because it's very much an overused term, but it really just indicates that we as consumers, all of us, me included, want to use our phones and our laptops and our devices to do everything we can to transact business with people. It's easier and easier to do that and more compelling to do that. So things have changed a lot. And, you know, this digital revolution, for lack of a better term, I'm going to continue to use overused terms this morning, I think. This digital revolution has really created a customer you don't know. I think that's something that we talk about a lot in our business, and something I talk a lot about with fuel dealers who are frustrated with trying to understand the new consumer that we're dealing with. First and foremost, a lot of industries, every industry is dealing with this consumer. The digital revolution, the knowledge that consumers have, the power that they have, their expectations being set by extremely smart online vendors have really made them difficult to please, difficult to understand. So it is a customer you don't know, but get in line because every industry from automobiles to lollipops is kind of going through the same thing. And your job is to understand these behaviors and try to adapt and adjust, not just your business, but as an industry, we need to adapt and adjust. I heard somebody say rather inaccurately at a presentation at EEE a couple of years ago that the new customers just don't get us. No, you don't get the new customer, right? So it's a mindset shift. These folks are really interesting. We're all of them, by the way. If you want to know who this new consumer is, go look in the mirror or talk to your teenage children or 20-something children. They will let you know who this new consumer is. They definitely, and we definitely, like a lot of different service levels. We appreciate a brand. We appreciate a great story and marketing. And we appreciate reputation, but what we don't like as consumers is to be put in buckets. We kind of want to choose how to engage. If an example would be Nordstrom, if I want to go buy a suit and want the full experience, listening to the grand piano in the lobby and getting a great lunch at the cafe and getting fawned over by a really talented sales associate, then I can go in the store. If I don't want to do that, I still like Nordstrom, I want to go online and do it. Maybe I want to go to Nordstrom Rack and find some middle ground. So service levels are kind of a thing of the past. The problem that this creates for the fuel business is that we essentially have two buckets: full service automatic and everybody else. And when you give a consumer a binary decision like that in today's day and age, they typically revolt. And that's kind of what's happening. They'll create their own category. They'll want pieces of all different categories. So our two buckets in this industry are starting to create a little bit of a hiccup. They expect to be engaged online. This term engagement is not simply being online. Having a website or even having a payment portal is not an online presence. That is sort of 10 minutes ago. Consumers really like engagement. They like to be able to learn. They like to be able to find reviews. They like to be able to transact business. They like to be able to communicate and chat, use social media. They want to do everything they can do with you in the physical world in a virtual world. They most certainly are getting less and less and less patient with telephone. Another challenge for our industry is that it's very much phone-based. And we're quickly getting in a world where people just don't want to use the phone. I read a recent research that talked about the fact that roughly 75% of consumers only view the phone as urgent matters, meaning they can't get something done, there's an emergency of some kind, or there's a problem with the online engagement tool. That's a pretty big number. Most importantly, I think these customers are having their sort of experiences shaped not by your competitors. It used to be a little bit easy, right? You had you and your other fellow dealers in the marketplace, and you competed one-on-one, and the consumer chose by brand or by price or by something or some kind of deal. And then that service that they got was judged against their prior dealer. But now consumers all over are being shaped by their experiences everywhere. They sort of see shopping as a generic term for anything that they buy, and they're putting it all in one bucket, and they're not delineating who they're buying from. They just expect sort of a ubiquitous experience across all the things that they do online. So what you have here in a couple of quick terms is a very self-determined customer. They want to have it their way. They want to be in control. And that tone shift for consumers is probably what's driving the increase in will call and COD. We know for sure from talking to dealers and looking at some of the research that's been done in the industry in the last 5 years that the numbers of will call and COD customers are growing. And a lot of it has to do with this changing consumer. It doesn't have everything to do with them suddenly not wanting to be automatic, although there's a little bit of that. We'll talk about that. It's their only way to assert control over their relationship with you. In the immortal words of Mark Benioff from Salesforce, for a very long time, businesses had the attention of consumers, and now consumers have the attention of businesses. And will call and COD is a way for a consumer to get your attention. So this is an old slide that I use when my young daughter used to illustrate my PowerPoint presentations. We used to have a lot of fun with that. She's 14 now, so if she saw this, she would be mortified and probably hit me in the head with a hammer. But this is how you pick a fight in the fuel business. And I have picked a few of these fights in rather infamous settings that some of you may have witnessed over the years when I do speaking engagements. This whole value judgment of automatic customers versus will call, and the profile that automatic customers are perfect and they're on budgets and they're invested in you and they're really the cornerstone of your business, and everybody else, will call and COD, are just second-class citizens, right? They're low-value customers. they're irritating. You have painted them as in a profile with having a 420 FICO score and wanting 50 gallons delivered in the middle of the night, and they're out of oil, and they have a pit bull at the gate when your driver pulls up, and you know what images are evoked when you think will call and COD. I would like you to, at this point in the presentation, sort of put that aside for a second and start to think not so much of value judging automatic versus will call, but thinking of fuel customers as a single group who, within those ranks, there are people who want to choose the way they do business with you. Some of them will choose automatic, and some of them will choose will call, but they're all valuable fuel customers. I say that because, you know, I don't like to be another person with doomsday prophecy, but in 2000, this industry delivered 10 billion gallons of heating oil and 12 billion gallons of propane. And if you fast forward to today, we're down to around 4 billion gallons of heating oil. That's a huge drop in 19 years. And somewhere around 8.5 billion gallons of propane. At one point, it was closer to 7. So both industries, certainly heating oil, has had a demand erosion, and we all can recite those reasons, systemic reasons for that very, very easily, right? But the real point of that is that with a customer base that has shrunk and thankfully stabilized, by the way, both of those businesses now are stabilized and propane is growing again. But customers are so valuable in a market like this that is mature and there's not a lot of new heating oil customers coming into the market. Every customer has massive value. Every gallon has massive value. How you get that gallon really is becoming irrelevant at this point. It's all about maintaining and preserving your volumes in your businesses. To back this up, I think it's important to recognize how will call and COD have changed forever. This segment of the market is no longer what we think them to be. It no longer fit the profile. A couple of reasons that this is true. Internet shopping has made low-end relationships cool. One of my favorite lines, right? So for a very long time, a lot of businesses, and I think consumers too, sort of appreciated a premium experience, right? If you think automatic, full service, budget, price cap, you know, that's a premium experience, very tactile, very invested experience. And anything other than that used to not be cool, but now low-end relationships are cool. People actually really like and are proud of the fact that I don't need that experience. I just need the basics of whatever I'm buying. And it's actually a badge of honor to be in these low-end relationships, whether that is car insurance, whether that is my cell phone provider, or whether that is how I buy clothes or electronics. I'm cool without the premium experience. I think that is very important, and we're all in that world at the moment, right? We don't have those deeply invested relationships with our people that we buy things from as much anymore. Secondly, demographics, right? We know for sure, yes, there still are some people with 420 FICO scores who are out of oil who have pit bulls. I get it. And they've been around the block and burned 5 oil companies in the last 2 years for not paying their bill. But there's less and less of those and more of a different demographic in will call and COD, this self-determined, in-control consumer who's just choosing to buy from you a different way. The example that I use demographically is, ironically, although I am promoting a software that will help you deal with the will call and COD market, I am a dyed-in-the-wool, full-service, automatic customer. I live in central New Hampshire. It's very cold, a lot of snow on the ground still. I have automatic, I have auto pay, I have a service contract. I buy from a local, very well-known independent dealer. I'm sure you've all heard their name, and I'm really proud of that, and they do an amazing job, and I don't have to worry about anything. However, my neighbors are retired pediatricians from Boston, and they make a sport out of it. They love going online, buying fuel. They're not into the full service value prop. We argue about it all the time. And weirdly enough, last night I was at an event at my daughter's school, talking to the principal there, who kind of knows what I do, knows that I'm in the energy business, and we were talking about this, and he said he switched to buying fuel online. And I found that pretty fascinating. He too is not someone who would fit the will call online demographic. But he said he likes it. He likes being able to order fuel at 10 o'clock at night. It's when he has time to sort of kick back and figure out what's needed at the house, and doesn't need all the other bells and whistles. So again, demographically, they've changed. There's far too many. By all estimations and research, the exact numbers are hard to come by. In a lot of markets, the total volume consumed, this is not your customer base, this is your total market, is somewhere around 50-50 in a lot of markets. 50% of the gallons are being bought on will call and 50% of the gallons are being bought on automatic. Again, not your base. In some markets, of course, it's less than that, right? In Fairfield County, Connecticut, and parts of lower New York, and there's a lot more automatic, sort of traditional full service customers. But on the other end of the spectrum, if you talk to dealers on the 128 loop, 495 loops in Boston, they'll tell you that they think it's too low. They think there's more than 50% of the gallons being bought at COD, and the same thing holds true for Maine and even parts of New Hampshire. So if you let's just be ultra conservative, if 30 or 40%, 50% maybe of the customers in a given market are buying will call and COD, it's kind of hard to ignore half a market, especially for heating oil dealers who have seen a big dip in demand over the last 15 years. They are not one-hit wonders. This is another big change. Yes, there are some out there, but we have dozens and dozens of customers and thousands of their customers and hundreds of thousands of deliveries over the last 10 years to look at. And the loyalty rate is somewhere around 65 or 70%, meaning they're buying from our customer repeatedly online. That's really close to full service. Full service is probably 85 or 90, depending on where you are for a loyalty percentage. It's much closer than you think, which really makes this a hybrid. If these are demographically different, if these are essentially the same customers that are used to buy or who are buying, at least profile-wise, from you automatic, if there's a whole bunch of them, if they are very loyal, it's a hybrid, right? This is sort of in between the old-fashioned will call and the new will call. Full service, right? So they've created their own category, no doubt about it. But I'm going to say it out loud because I used to sit in your chairs back in the day when I first got in this industry. I worked on the operator side for a couple of the big MLP players. They are still disruptive. They always will be because it's unpredictable in a world where you're trying to manage a lot of logistics to get deliveries made. And they're margin killers. They consume a lot of resources. They consume driver's time. They can be a financial nightmare because you're trying to get payment from them. Sometimes the deliveries are small. Not everybody charges more for those deliveries. So they are disruptive and they are margin killers. So what have we done? We have a changing demographic. We have a sort of mainstream fuel buyer, a group of mainstream fuel buyers choosing to buy will call, and it's disrupting things. It's also providing an opportunity. We'll talk about that in a second. So portals have been a really good thing and a good step in the right direction. But, really these are meant for full service customers. Yes, you can ask for a delivery, but they're really designed to service existing customer relationships, not a sort of online transient type consumer. But it's a good step. Tank monitors too were thought that maybe for will call, tank monitors would be a good way for you to sort of build a middle ground between automatic and will call. They take the guesswork out and they do a great job. But again, this is landed mainly in the full service market. So these online or consumer technology tools are obviously valuable to your business. We are strong advocates of all this stuff, but it has not helped dealers manage the growing will call and COD market. E-commerce is the way to do that. And whether you buy our system or you buy some other system, true e-commerce is the only way to handle an internet-focused sort of savvy, self-determined consumer. Doing everything you can online that you can do in the physical world is key. An e-commerce system is not a shopping cart. It's not a portal that can take an order. It's a system that is a virtual CSR team. It can attract business. It can communicate with customers before they become your customer, potential customers. It can engage them when they become a customer. It communicates and talks by email and text. It allows them to order. It takes payments. It sends out newsletters. It does marketing of all kinds. That's e-commerce. Think Amazon, that very engaged virtual relationship, two-way communication, lots of love and lots of information by way of email and text as you are doing business with a company. That is what e-commerce for fuel can do, and that's what dozens and dozens of dealers of ours are currently doing it today. It fulfills that engagement expectation. Like I said, it has all the tools that you need, the consumer expects. You can drive meaningful growth. It's a very innovative way to grow. Using e-commerce, going online with the right tool, the right kind of marketing can have incredible results in terms of growth. We have seen many of our customers, and these are not one truck operators, these are significant businesses whose e-commerce gallons are now eclipsing their regular business. True story. A couple of notable New England-based companies who, in one case, their e-commerce business is now twice the size of what was a substantial traditional business about 7 or 8 years ago. You're going to automate servicing customers. It's unattended. There's nothing for you to do. They don't call you up. Everything can be done online. It's very intuitive. It can build digital relationships. That sounds like an oxymoron, but think social media. You can have a relationship digitally. It doesn't have to be over the phone or in person or with a handshake. Digital relationships are defining our world right now. And as an industry, we have a history of very tactile, a lot of touching, a lot of phone, a lot of mail, a lot of postcards, a lot of stuff happening that is not digital. It is frustrating consumers. If you look at some of the research that has been done over the years, in the last 10 years on the industry and customers, you'll find that, yes, some of them do appreciate the security and comfort of the full service relationship, but they think it's old-fashioned, it's too hard, there's too much friction. Pay attention when customers say that. Being digital is important. And then above all, it reduces your fulfillment costs. We'll talk about that in a second, but clearly not pushing people through a phone bank, clearly not waiting to pick up checks at a gate, clearly not giving terms to will call customers, and never touching or seeing or talking to them unless you're delivering fuel will reduce the cost of fulfilling that. And it gives customers the experience they get elsewhere. So this touchless sort of mindset, really order to cash is not the full life cycle. It's touchless from the whole customer journey, from awareness and marketing and getting customers to know who you are, all the way through to them being a repeat customer. That whole journey is touchless. It's very, very different than a traditional fuel business. The marketing is different, the engagement, the order process, the payment process, the communication process, all completely unattended. As a lot of our customers joke, I get in the morning and there's just a big pile of deliveries that came in from my e-commerce site last night. It's a pretty cool thing. So all these engagement tools are in one system. I just talked about that, right? So everything a customer needs is there. It will drive down costs, but taking pressure off resources. This is especially true these next two here. Pushing your on-demand customers online. A lot of our clients take their will call and COD business, which they don't mind. You know, most dealers have anywhere from 10 to up to 50% of their business that's will call. Meaning if you're a full service company, you all are already in this business. You may not like it, but you're in it. A lot of our customers move their will call business online, take them off the telephone, take that disruption away. That was really important last year when we had that ridiculous cold spike and people were just on the run and will call customers, heck, your automatic customers are driving you nuts. The will call customers are driving you nuts. You were sending them away. They didn't know what to do. Part of that is it was, if you talk to dealers, it wasn't just a truck problem. You probably had the truck capacity most of the time. It was, you just didn't have the time on the phones, right? I have a dealer client in upstate New York who was fielding 700 phone calls a day. They only have about 4,000 customers. So you're dealing 700,000 phone calls a day out of, 25% of your customer base is on the phone. You don't have time for will call customers. Moving them online is really important. Acquisition costs are very low. If you look at Gray, and some of the people who follow, the cost of getting a new full service customer is somewhere between $500 and $700. Some people say it's up closer to $8 when you look at marketing, sales reps, incentives, all to steal. But I always make the joke that you're not stealing a customer from your competitor. You're buying one. You're doing a micro acquisition at $500 a head. That's very expensive, especially at 800 or 900 gallons a year. It's going to take you a while to recoup that unless you have huge margins. Online, acquisition costs $65. So it's roughly a tenth of the cost. And that's because of the ease and the automated nature of marketing and engagement. Getting them to become a customer is a lot cheaper than your full service business. Also drives down the cost on that customer, which drives up the long-term value. And then cross-selling, I'm going to touch real quickly here on the mythology. If I open up an e-commerce business, Mark, then all of my full-service customers will move. Well, if they were that vulnerable, they would have already moved, because there's probably 20 COD dealers in your market that would take them away right now for 40 cents less a gallon, and they haven't left yet. So they're not that vulnerable. What we really see is the opposite. We see very, very little cannibalization of our dealers' bases from automatic to will call. We see it going the other way, 2.5–3% growth of full service coming from the online site by simply cross-selling. Hey, look what else that we do over here, and customers saying, wow, you know what, I think I'd like a budget. I think I'd like a price cap. Prices are going up, and I think that's smart. I'm going to move over here. The mythology is not true. It is growth on the full service side from will call that is more prevalent than the opposite. So if you're in the e-commerce business, then obviously you need to be in the marketing business. You don't just put up a URL and a pretty website and the whole world finds you. That's not the way it works. One thing I do say here, and I try to challenge sort of the conventional wisdom in the industry, and again, I'm in this industry, so this is pointed at me too. This industry has not been very good at marketing over the years, and largely still isn't. And the great folks at Consumer Focus and others in the industry trying hard to change that, but as a market, we haven't been particularly good at this function. I still see lots of GoDaddy websites. I still see lots of static websites. I still see websites that look like a 15-year-old built them, and too many pictures of trucks. Marketing is not a strength. In e-commerce, it has to be a strength. And not only does marketing have to be a strength, but digital marketing has to be a strength, which is, as any of you know who have websites and are starting to do more with digital marketing versus traditional print or other types of marketing, it's a unique science. It's way more fun and way faster moving, but it's a cool thing, and it's necessary for e-commerce. Driving traffic is the most important thing. The same holds true for your full service site, by the way. You got to be driving traffic there. 65% of fuel customers will go to a website to research before they pick up the telephone. So you got to have a good site. Digital marketing is built around a Google concept. Apple jumped on it, but Google invented it, called micro moment. Just follow along here for a sec. I don't want to geek out too much, but this is important, especially if you're a consumer-focused customer and understanding why certain marketing firms use certain types of tactics. Micro moments is based on the dynamic that as consumers and people in general, because we have smartphones, we're always connected. We don't go home at night and have long sessions on our laptops or PCs anymore, where traditional marketing might work. We are living in micro moments. We are on our phones constantly, checking things, text, email, Facebook, Instagram, work, whatever. And those, we're also doing a lot of research and shopping because we've all developed a massive case of sort of collective ADD. So Google defines this as customers really have 4 things that they want to do in micro moments. They want to know something, they want to go somewhere, they want to do something, they want to buy something. So marketing has to be very, very targeted and precise and quick to absorb. Gone are the days of massive amounts of content and labored marketing campaigns. It is really short moments. What can I say and do? What can I deliver to someone real quick when they pick up their phone that they're going to have something there from me while they're doing something else in these micro moments. The other big thing about micro moments, I don't want to get too labored on this, but these are really important things and really important for your marketing folks to understand, is that as consumers now, in these micro moments, we have intention, right? We're not looking to be made aware of things. This whole concept of impressions and all that other stuff is great, but we don't have time. We have an intention. We want to do something. Therefore, your marketing has to be very action-oriented. It has to entice them to take action, to do something with you in a very, very short format. Think of it as sort of Twitter for marketing. So if we're living in these micro moments and marketing has changed and the way that you have to market has changed, then therefore your tactics have to change. Behavioral marketing is crucial. I'm going to talk about that more in a second and as I start to wrap up. But that's when a customer hits your website in e-commerce, as they do certain things, visit, register, to get a price quote, hit your About Us page, whatever they do, you're going to trigger an email or a text to them, thanking them for visiting and maybe offering something or whatever it might be, even a little more information. So it's validating their behavior, targeting promotions, using incentives, using email, all done in an automated environment within e-commerce. Of course, social media is huge in these micro moments. Most people texting and Facebook are what they're really doing. But if you're peppering in email and text messages as they're doing those things in these micro moments, then you're going to be really effective. You can't rely on sort of big monolithic campaigns anymore. And this last one's important. E-commerce sites sort of are built on the foundation of the give-get principle for any of you sales folks out there. We'll give you cool stuff, cool content, and newsletters or whatever else, but you're gonna have to, we're gonna have to get something, and that get is your email. So our customers assemble massive amounts of emails, 5, 10, 15, 20,000 in some cases, email addresses. And that is so powerful for email campaigns, for your business. It is really gold in today's world. That email address is the key. Qualified marketing expertise. This line, honestly, is always in this presentation. It's not because I'm doing it for consumer focus and shamelessly promoting them, but you do need a qualified marketing resource to pull this off. Some of the lingo that you need to learn. I always make the joke, I did a lot of procurement and hedging and trading in this industry for a lot of years early in my career. And we went from going to the rack and pricing fuel and having tickets to suddenly having to learn about puts and calls and swaps and collars. And we all had NYMEX screens, and there was this entire new language we needed to learn. Same holds true here for marketing. It's not postcards and just plopping up a website. You kind of need to know what these things mean. And if you don't, you should ask your marketing resource and learn about them because they're pivotal to your success. SEO is search engine optimization. That one is pretty common. What's not so common is how that really works. That is a very complex science, trying to work around the search algorithms and the things that are trying to delist or push you down the list to get you to pay for advertising. It's using the right kind of site design, the right kind of tools on the site, such as videos. It's the right keywords. So SEO is very important to driving traffic. People have to find you. Hyper SEO is simply taking that to the town level. Google loves when you link a consumer's location to a town page on your website that resides in the background. Very, very powerful tool. Pay-per-click, we know what that is, right? That's buying clicks. In e-commerce, this is an incredibly successful tool to use. I would give you a caution though. Choose the right PPC vendor. PP strategy and PPC execution is very easy to be done poorly by someone who doesn't get it. The reason for that is, first of all, auction rates vary a lot. You got to make sure that you're paying the right amount. In some markets, that auction rate is $5, $6 a click. When there's Petro and Hop in the neighborhood, that's pretty expensive. The other thing is, if not done well, PPC can become the world's most expensive white pages. The customer goes looking for your phone number. You're listed in the first 2 or 3. They click, and they call you up, and you paid $6 for them to find your phone number, maybe 3. So use a good PPC vendor. Geo-targeting is an extension of PPC. It's ensuring that you are marketing only within your territory, that you're not marketing outside your territory, confusing customers, confusing yourself. It is zip code driven. For example, our sites are built around zip codes, and therefore marketing is done in a very targeted way. Within that territory. Retargeting is in the world of cookies, which is you go to our website and then we can follow you around, and when you're on Yahoo, suddenly your fuel dealer puts up an ad on Yahoo that has followed you there. That's really cool. We have a customer in New York who does this a lot, and I'm on their list, so whenever I'm surfing the web, I'm getting their advertisements and marketing, and it's really a cool thing. Not everybody does it, not everybody likes it. Some people don't like the cookies and the follow me on a personal level, but it is a pretty effective technique. The last 2 real quick. Manners marketing, that is, don't believe that online relationships are sterile. They are not. It is not just a mechanical clicking, it's a consumer on the other end. Think the same way you do, thank people, be courteous, present your brand well, validate them, make them feel important, personalize communication to them. It goes a long way. And then bullshit radar. The old trick of thinking you're going to get in this discount COD business and make it a secret, and you're going to fool all your customers. Customers are way too smart for that. It doesn't take a real smart person when you pull up in the driveway with your truck. But don't use this tactic. In fact, do the opposite. Market a diversified omni-channel story. Excuse me. Done this. This is the second time I've done this week, this presentation. Yesterday was the other one. Do the opposite. Market this omni-channel model. Talk openly about the fact that you have a great business. You're very proud of what you do, and you're very proud of the fact that you let consumers decide how to engage you. Whether that's COD at a discount for oil only, or whether that's the whole enchilada, you do both and you're proud of it. A bit of a sea change for dealers. This is the automated marketing thing. Again, I'll just quickly go through this. Just means that you're acknowledging and sending out, in our case, in our system, about 40 different behaviors a visitor can do on a site that will trigger an automatic email or text message. It's really cool. This slide can be summed up in one sort of fact. Only 2% of consumers who go to a website will buy on the first visit. The other 90% have to be cultivated to buy in the future. Behavioral marketing is the way that you get that 98%. It's one of the tools. If somebody comes on and gets a price and doesn't order, and then 5 minutes later you send them an email, thanks for visiting, here's a 5-cent off coupon if you buy by the end of the day, we're going out and getting those gallons that were lost when the customer left that site in an automated way, using social media for the same thing. Affinity programs, lining yourself up with things like the Girl Scouts or breast cancer awareness, really drives consumer interest, builds a sense of community. The last one real fast, seems like a duh, but it's not. There are still a lot of websites out there where you have to call somebody up to make changes to the website. You know, your e-commerce site is a living organism. It's changing all the time. There's snowstorms coming. There's incentives to be had. There's stories to tell. You want to be able to do that on your own, or have your marketing resource do that on their own without being an HTML coding expert. That's really, really important. Couple of last comments here. E-commerce, we know, is different for propane. I was on the call yesterday with a propane dealer in Michigan, and we understand in the Energy Engine we have a separate module for propane. Will call customers like to be online. You can move your will call customers online to get an e-commerce experience at all your price tiers, all the different things that they need to know as an existing customer without calling your phone. Customer-owned tanks, this is a phenomenon. We know it's controversial in some corners, but it's growing. In some markets, it's up to 20 or 30%. So it is a thing. We have, and e-commerce tools should have a way to get this brand new customer with their own tank through a process that covers you from an indemnity perspective. It has all the gas check and all the protocols are met before you go to deliver to that tank. A good e-commerce system can do that without having the phone picked up. Of course, you will need human contact there at some point because of the requirements. Lead generation. This is a cool thing that propane dealers do with our system and probably other e-commerce system, is they push their market out artificially. They just add zip codes to their target area and see if adjoining markets have demand. Again, another of our New York customers has been doing this really successfully and found that an adjoining county has a huge demand in the propane market that they didn't know existed, but used e-commerce to go find it. Two last bits of unsolicited advice, and then I'll flip it back over to Jen and Adrian. The COD phenomenon has been around for 25 years. It's not new. It's a pain in the butt. We're all a little sick of it. Guys with a truck and an answering machine, and customers go for the price, the margin is low. E-commerce does two things. First of all, most consumers hate this vacuum they get from a COD company. They can't get a call back. They don't know if they're going to get an order. Did he get my message? Did he not get my message? So e-commerce solves that because it lets a COD customer have a more convenient, more engaged experience with you, and they're willing to pay more for that for sure. We know that from a lot of experience, and we also know that fulfillment costs are reduced by at least 12 cents a gallon by not driving them through your full service operation. So it's a pretty good trick to use against rusty truckers. A lot of our dealers have quite a lot of fun messing with their COD competitors with e-commerce, and consumers love the convenience and flip all the time and pay more money all the time. Second thing and last bit of preaching is please don't race to the bottom. There's these aggregation sites out there. They fall under a bunch of different names. Most of it is called giveawayyouroilforfree.com. They do all the work on the digital marketing side and all the customer management side, and they turn you into a trucking company with really low margins. It's a reverse auction. You don't have the relationship. You've lost that customer's equity and value to your business. You can do it yourself. The beautiful thing about a good e-commerce system and a good marketing firm attached to that is that you can have all the power of these aggregation sites, but it's your brand, your rule, your customers. Don't race to the bottom. I wince every time somebody tells me they did a delivery for 23 cents over the rack because that's what they had to do to get it for the online aggregation site. Not worth it. Don't even bother rolling the truck for that kind of margin. So an e-commerce strategy takes commitment. This is a new business. You kind of have to think of it as a new business venture. It takes a year or two to really get this off the ground, and then it typically accelerates exponentially. But you got to be committed to it. It's not plug and play. It's fun to do. It's very interesting. It has energized a lot of fuel businesses because it's growth for a change versus trying to manage preservation. You have to be competitive, but you don't have to be the lowest. Most of our customers live somewhere around 14, 15 cents above the bottom of the market. In some cases, they can be 20, 25 cents above because Customers love the convenience. They might come for a good price, but they're going to stay for the convenience. You're communicating with them all the time. You need to connect with them. Those are the things that will allow you to have a higher price in the will call and COD market than the COD guys. But consumers love the e-commerce part, and they have fun with it, and it validates your little higher price. It's not unlike the way you validate your full service price with a value proposition. Online e-commerce becomes your value prop for the will call and COD market. The sixth C is consumer focus. As I said, digital marketing firms are crucial to success in any e-commerce business, certainly the fuel business. They are an endorsed partner of the Energy Engine. We've known them for a very long time. They've done great work. They're knowledgeable of our software, which is important. You know, marketing, e-commerce requires that you know how the software works. We have a marketing roadmap. The founder of our company is on the phone today, has been in the e-commerce business along with Adrian for almost 20 years in the fuel business. They've been in it longer than anyone. They know what works. There's a very specific roadmap. Consumer focus has gotten very proficient at executing that. It's not easy to do. They have a very strong team. Obviously, I'm not pandering. We know that they're great people. They do a lot of great things in the industry. They always seem to be everywhere. They have good internal resources for all the stuff we've talked about around websites and SEO and PPC and campaigns. So we're really proud to have this relationship with them. The results speak for themselves. Across our network, year over year, again, John, the founder and CEO, is a data nut, keeps track of everything. Our customers are growing by more than 500 customers a year. These are repeat loyal customers. So that's a lot of gallons. In some cases, we have clients who are putting multiple millions of gallons of fuel through their e-commerce site. You have lower customer service costs. We have an average drop size around 195 or 200. True story, when it gets to 185, actually, John called the dealer up and asked what's wrong. A full service dealer would love to have a 185 average drop size, and lower acquisition costs. So all this stuff, growth, lower costs, more optimized deliveries, e-commerce is a very profitable business to be in. It just takes a mindset shift to believe that these will call and COD customers are just mainstream fuel customers. They're not second-class citizens, and you have a growth opportunity if you choose to engage and nurture that part of the market. And with that, Jen, I'll flip it back to you.
How about I take it, Mark, for questions?
Oh, I'm sorry. That's right. I just forget the order.
That's okay. That's
sorry,
okay.
Adrian.
Just in case anyone doesn't know, Mark does these great webinars, but should you have any questions, on the right side of your screen in the GoToMeeting panel, there is a box for chat. Just simply write your question in there and I will toss it off to either Mark or Jen. So Mark, the first question is, you say that customers expect to be engaged online. I'm not sure I understand. Do you mean by having a good website, or do you mean you have to send emails?
Did you say online engagement?
Yeah. You say that customers expect to be engaged online.
Yeah, no, it's engaged is really just thinking. It can be emails, it can be a lot of things. Just put yourself in the place where whatever you can do in your CSR team and in the office in the physical world, consumers expect you to do in the virtual world. They expect to be able to get information. They expect to be able to get prices. They expect to be able to order. They expect you to confirm that order. They expect to know when the delivery is happening. It's more about communication and taking the relationship that you've delivered over the many years and thinking of how that happens in a virtual environment.
Okay. The question just came in. Is 30% volume growth for will call customers as a segment or for total volume?
30% volume growth, as I think the question means, are they growing their will call business by 30%? Yes, they're growing their e-commerce gallons by 30% a year. I think, it varies wildly, but the average first-year e-commerce customer for us, John can correct me if I'm wrong. Granted, there are guys and girls who can knock it out of the park in year one and do 150,000 gallons. Most are doing 50 to 75,000 in their first year, and then growing by 30% a year after that consistently, not once. I hope that answers the question.
Well, if not, just put in a part two. John, did you want to say something?
I was just going to affirm what Mark said. Actually, if we look at the entire Energy Engine network, as far as don't want to get too technical, but a compound annual growth rate over the last 5 years, the entire network has averaged just about 30% in online fuel growth. There have been a couple of years that have been a little bit less than that, several years that have been much more than that, but averaged somewhere around 30%. So that's across the entire network.
Okay, great. Next question is, and Mark, shame on us. I use the Energy Engine for heating oil, but haven't thought about it for propane. How does that work with the tank situation?
Yeah, if we have an engine customer not using it for propane, shame on us. It is very different. I'm not gonna sugarcoat that. We have a propane. We actually took the step of building a propane module because we know that with customer-owned tanks, especially, dealers have to be extremely careful to follow, all the rules of the various safety organizations and protect themselves and protect their customers as well. The way it works is that our system is built to do about 90% of the work, meaning it will inform a customer of their requirements for tank and gas check and inspections, and it will have them sign off on a release. It will talk to them about your process for doing gas checks. We have that language vetted a lot by the big insurance carriers in the industry like Energi and Federated to make sure that we're covering the base. Same with our heating oil indemnification contract. So it does go through all that process with a customer-owned tank propane customer, or even a new propane customer who may want one of your tanks. What it can't do is schedule a gas check. You're going to have to get on the phone. So in the propane world, it's touchless up until you need to schedule that tank inspection and gas check.
Okay, Jen, we've got a question for you. In terms of marketing, can you talk about what is needed or maybe recent experiences that Consumer Focus has had with Energy Engine clients?
Sure. That's kind of a broad question as far as what's needed. We've worked with many Energy Engine clients, and the ones that are succeeding the most are the ones who are using the most to market out of every marketing channel and using multiple marketing channels. Consumers today are so busy, they're looking at things in seconds and not spending a lot of time on marketing, so it's important to touch them in as many places as possible. So they're doing social media, consistently posting, they're interacting there, they're using pay-per-click ads, they're using organic SEO, trying to come up in those search rankings organically. They're engaging people to write reviews and responding to those reviews, which is increasingly important as far as getting new people to the site. And they're making sure that they're in on the online directories like Google My Business and Yelp and Bing and all of those major directories where people are searching. So they're communicating constantly, and they're not stopping at any point. They're just consistently communicating with their current customers and acquiring new customers.
Okay, good. Hey, John, since you're on the phone, and I know you keep track of a ton of numbers, do you want to add anything to that?
I'd be glad to. As I was listening to the question, I was thinking about what Mark mentioned, I think 2 slides ago, when he mentioned that Consumer Focus is an endorsed marketing partner. And in our world, those are not just words, because the number of endorsed marketing partners that we have, I don't need one hand to count them. It's a very, very small group. And here's why. One of the things, and remember, and most of you, or many of you anyway on this call, know that all three partners of the Energy Engine, Mark, Adrian, and myself, have all sat on your side of the desk. So we've been in your shoes. We've tried to find marketing organizations that were good at what they do. Sadly, our own experience, and we've also seen this within our Energy Engine network, have had a difficult time finding marketing firms that are really good at digital marketing. It's kind of a sad fact, but there are a lot of people that put out a shingle that says, hey, I'm a digital marketer, and they may not be particularly good at what they do, or at least not able to get the results that we see companies like Consumer Focus and our other endorsed marketing partners, getting. Mark, during the presentation, and hopefully you got the flavor that in a true e-commerce platform, there's a lot of things that the e-commerce platform does, the behavioral marketing that he talks about and so forth. But your role, if you're considering kind of putting all this together for your business, where do you have to start? You have to get some traffic to your website. And that really falls on you. We can't do that. We can't get the traffic to your website. So you need to do that. Once that traffic gets there, there are all sorts of things we can do with that traffic to engage them, to retain them, or to convert them and then retain them, and so forth. But you need to get them there initially. That's what our endorsed marketing partners are particularly good at. And their clients consistently are within our best practices group. So they're exceeding those averages that Mark talked about in the previous slide. They're the ones that aren't acquiring 500 new customers a year. They're doing 2 times that and more. Their loyalty rates are into the 70s. And matter of fact, we have several companies now that are tickling 80% loyalty rates. So they're getting the best performance. So, it's certainly Consumer Focus, and we are delighted to work with Jen and the entire team she has put together over the last few years, and are confident, referring clients to them. But an endorsed marketing partner, or someone that knows how to do digital marketing well, is well worth your investment. And if anybody has any other questions about that, my contact information is on the screen. Feel free to reach out. Be glad to answer any more detailed questions that you might have as well.
We just had one of our clients actually put up, I'm up 41% in gallons versus last year. So
there you go. Did we pay him? Okay. Did we pay him or say that?
I did not, I swear. Okay, Mark, the next question is it came to me in 3 parts, so we have to be patient with me trying to read it. What penetration of your current will call customers move over to e-commerce in the companies that have gone into e-commerce, percentage-wise? And just to clarify, if I have 10,000 will call customers, how many of those customers would convert to e-commerce in your experience?
In our experience, that number, I'm gonna give an answer that the person I saw that come through. So Vin, if you're on the phone and want to talk through further, give me a shout or send me an email. That number varies a lot. Meaning, can I convert my will call customers and move them online? Typically, what we're seeing is 20 to 30% in a year. We just had a company, fairly new client, about 2 years with us now, who recently told me that they've moved about 30 or 40% of their will call business online. But granted, this is not a huge company, so that might have been, 700 people out of 1,500 or 1,800. So 30 or 40%. It varies a lot. It also depends on how much effort they put into the conversion. The company I talked of a couple seconds ago put a lot of effort into. They'd send a lot of information out. But I'll tell you a really good story, Vin. One of our largest customers roughly, I believe, 7 million gallons. John will always correct me when my numbers are wrong. Was in the COD business before, pretty much phone-based, and they have moved, I believe, 100% of their very large customer base online and are doing 300 to 400 plus deliveries a day through the Energy Engine. And when you talk to the two gentlemen that own that business, they crack up because here they are doing 7 million gallons a year, and it's two brothers and a woman in the office, and the phone never rings. So it can span everywhere from 10 or 20% up to a huge 100% number. But I'd say 30 or 40 is a solid indication that you've done a good job moving a big bunch of your will call customers off the phone. I hope that answered it. If not, then reach out to me. I think we're good. Oh, Vin says it does, so there you go. There's a good way to end my my webinar. So Jen and Adrian, I'll turn it back to you.
Okay, it looks like that's about it. Jen, did you want to add any final words?
Yeah, just thank you everyone at Energy Engine, Mark, John, and Adrian for doing this webinar and joining me today. And if anybody has any questions, reach out anytime. Thank you.
Okay, great. Everybody have a great day. Thanks for joining us. Bye-bye.